Yo, my people. I think we're live, right? We live. All right, my people. Welcome to the stream. It's a beautiful Wednesday, at least here in Marbella, Spain. I hope you guys having a blessed morning wherever you're tuning in from and done your morning routines. Have your coffee ready. My name is Jeremy from the Free Minds, and we're about to dive into these markets. Hey, what's up, man? How you doing, bro? Let's get into this. Y'all, interesting day and interesting week with not only Bitcoin, but basically everything that happens that's going on in the markets right now. We got our crypto industry. We got Bitcoin pumping and doing some crazy moves. But yesterday we saw crazy moves, not only with crypto, but good morning, Steffi. Not only with crypto, but a lot of markets when the CPI readings came out. And the thing is like this, why is crypto pumping right now? Why is crypto pumping right now? Well, the thing is like this, there's a lot of fear in the markets towards banks being that is coming up now. People are starting to get aware of how scammy this whole bank system is. The thing is, I'm always saying it, like the banks is the biggest Ponzi scheme there is in the world. It's a whole, it's a big scam just, and it works as long as we trust the system. As long as we trust the banks, it will work. But as soon as people lose trust to the Ponzi scheme, as soon as people lose trust to the banking system, what happens is it all collapses like a house of cards. And this is what is starting to happen now. So the banking system is getting shaky in the ground. But when I'm saying like the banks might, like we might see a major bank run, we might see banks collapse and see a whole financial reset, a financial revolution actually, it's nothing that will happen in just a couple of days or a couple of weeks. It will take some time. But definitely crypto is the answer, and people now are seeing more, like more and more people are starting to see value in crypto instead of the banking system. They see value in the DeFi system instead of the CeFi system. What is DeFi? Is decentralized finance. CeFi is centralized finance. So it's the traditional finance that we have today. And this is why people are starting to flee the banking system and go to crypto, and first and foremost Bitcoin. Then also what made Bitcoin pump is of course that USDC repegged, so to say, because it depegged, as you guys probably know, and then it repegged again. A reason to its depegging was because the Silicon Valley Bank that crashed, that collapsed, that halted all withdrawals. Also, big scam. I'm doing a video on that, and I got a couple of shorts that we just released on that. USDC had exposure to the Silicon Valley Bank, and therefore they dropped. USDC dropped in value, got depegged, but it's repegged now again, and that made Bitcoin, of course, pump again. So with that said, all right, let's look at Bitcoin. Where are we on the technical charts? Well, let's do like this. Let's clean this up a little bit and make it more easy for the eye, more friendly for the eye. Yeah, let's start with Bitcoin. So first and foremost, on the daily time frame, we are in the sweet spot. We are in the sweet spot from basically this sequence. So from this high to this low. All right. Boom Fibonacci, and we'll get this sweet spot here. All right, and we are inside that sweet spot right now. What is the sweet spot? It's it's called a sweet spot because it's a zone where market tends to retrace to. Why? Because it's a lot of orders here. There's a lot of market orders. There's often a lot of liquidity there. And here is there's no debate about it. Look at this. You see these candles here? This is a lot of unfilled orders. The market needs to come back and fill. And this is basically what it has done now. So with this pump that we had here, we filled a lot of these orders. And that's on the bigger time scale. So let's zoom in a little bit. We have this double channel that I call it. So basically this big channel here, and in that channel we have another channel, like those babushka dolls, you know, like you have a smaller doll inside the doll. Same thing here. We have a smaller channel inside the channel. All right, and what market did, this is when USDC depegged, yeah, and the Silvergate collapsed or halted all withdrawals. So Silvergate was like the bridge between fiat money and crypto money. So exchanges were using Silvergate to actually exchange cryptos into fiat money, US dollars, euros, and so on. So when they halted withdrawals, that made a lot of exchanges halt their withdrawals as well, and that was of course very bad for crypto. And we saw this dip. Things turn around. We saw this whole banking thing unfold, and USDC repeg again, as I mentioned, and we got this pump, and we are back inside the channel. But we didn't only come back into this first, like the big channel. We also came back to the smaller channel inside the big channel, and this is what we're going to zoom into now. So first, yeah, so looking at that, we came up beautifully underneath, as you guys see, respected this resistance line. So basically the trend line of the smaller channel inside the big channel. And it goes to show also how nicely Bitcoin can respect structure. So we respected it, played around, tested it for a while, and broke in. And now came back and retested it as support again. So here was resistance, came up, retested it as support. So in other words, we have a bullish scenario. We have a very bullish scenario. This is showing us that we got some bullish strength going on here, and the question is, do we have any more confirmations on a bullish move here? Basically, the thing that needs to happen for this market to move up higher is what almost happened here. That what I thought would happen here. I actually went in for a buy position here, but I lost it. It stopped me out because of this move. But what I'm talking about is this whole sweet spot that we got here. We need to break out of it. As you see, we a little bit trapped inside. We were trying to break out here, but we didn't manage. Came right back in. So we need to break out of the sweet spot to start looking for the next move. And that next move will be to the supply zone here. We got a lot of supply here. A lot of orders that needs to be triggered, that needs to be filled. And what do I mean with supply zone? I mean, let's say people buy here, for example. They buy here, so they're gonna cash out their profits somewhere along the line, right? So supply zone is a typical zone where you see people starting to dump their positions. And when they dump their positions, what happens? Market drops back down again. So that's the supply zone. We got a lot of supply here. Guys, when it comes to Bitcoin, I'm gonna be honest with you. It's right now, I don't see any trade because it looks like the market wants to push up. Everything's set up for another push up, but I ain't got no confirmations on that happening. There's no confirmation. We always want the confirmations. We want to be sure that what we're looking for to happen will happen. We want to have some type of confirmation of that, and I ain't seeing nothing like that right now. So we leave in Bitcoin like that. It's above the 20-day EMA on the 50 minutes. Even on the 1 hour, it broke above the 20-day EMA. It's resting above it, basically retesting it. It's forming some form of trend here on the smaller time scale. Got support from both the 200-day and 20-day EMA on the 5-minute time frame, but it doesn't do us much because we're looking for, when it comes to Bitcoin, we're looking for bigger moves. We're looking for 50, 100, 150, 200 pips move. So going down on the 5-minute time scale, that's good for to get a sniper entry or to scalp. But as you guys know, we in scalping here on the live sessions. And why we in scalping on the live sessions is because we got too much lag. From me talking to you receiving it or seeing what I'm saying, it takes about 5-6 seconds. So that's too long time to be able to scalp. During those 5-6 seconds, a lot of things can happen. Yeah, so basically we need to break this resistance at the smaller time scale. So we got some form of triangle forming here. Still though, I don't see any trade right now. I don't see any trade right now. Okay, so look, we got some form of triangle forming here, and this could be a possible breakout forming. But for this breakout to happen, we need to see market come above this support here, come above it, retest it to show signs of wanting to continue up. That would be a possible trade for us, but it will take a couple of minutes or hours until we get there. Right now, there's very low volume in the market. There's not much happening. So we basically leave it like that. Daniel, what is up with gold? Let me check that. Damn. Yeah, what is up with gold? All right, thing is dumping. All right, so gold. Let's just get a picture of the scenario. Let's just understand the scenario that we're at right now when it comes to gold. So gold, we are from this top to this bottom here. This whole sequence. That's one sequence. We have the supply zone here that thought actually that we would come up and hit before dropping down. And we have this sweet spot zone here. In the same time, while we have this sweet spot zone, you see this yellow dotted lines here representing the sweet spot from this sequence. We also, in the sweet spot, from this sequence, so the much bigger sequence. You see this filled yellow lines. That's the bigger sweet spot. So we just went in both of these sweet spots. And what does that mean? That means we're picking up a lot of liquidity. So basically, gold is loading up for a move, is what I think. And we get the 20-day EMA on the 4-hourly time frame that I think market will come and test right now. So I think this drop that's going on right now will come down all the way to the 20-day EMA, bounce off it. See on the daily time frame? No, nothing. All right, let's remove this. So right now, basically, I'm seeing this. Market is coming down to test the 20-day EMA on the 4-hourly time frame and to test the 50% Fibonacci retracement from this whole swing, this whole sequence that I was talking about. In the same time, and let's do like this. Let's remove this so we don't get confused with all these lines. In the same time, we got this sequence here, and that sequence. All right, so we see, one thing we see directly is that the market is resting against 23.6 Fibonacci retracement, and but I think it's going to break it to the 23.6 retracement level is not very strong. If you see market coming, respecting it and bouncing off it, then you know that the bounce off is going to be big, because that means like there wasn't much sell pressure in the market. Market came down to the most shallow retracement level and just bounced off directly. So you're gonna know that you're gonna see a nice pump from there. Most often, the levels you're looking for is the 38.2 Fibonacci retracement and the sweet spot that I just mentioned, which is the 50% to the 61.8 Fibonacci retracement. Let me distinguish this one. Yeah, let's do it like that. So once again, the big sweet spot zone, and here we got the smaller levels. Super sweet. Yeah, exactly. Yeah, it's a super sweet spot zone. So right now, when it comes to gold, I could basically see this. If we got sell pressure in the market, I would not want to enter a trade now, because I think this can happen. Market can come up again, retest this top of this big sweet spot that I mentioned before, retest it, and from there make the big move down to this sweet spot or even further down. So if market comes back up here and retest this level as resistance, and we see that the resistance level is showing strength, it holds, then we got a nice trade going on there. That will be a nice trade for us. Definitely don't want to have a 50 pip stop loss. We would try to catch it as high up as possible, but it's always difficult. And yeah, 40 pip stop loss on gold is quite okay. This trade would be 1 to 9, even more ratio, win to loss ratio. Basically what it means is, if it's 1 to 9 win to loss ratio, it means that, for y'all that don't know, it means that in one win I can afford 9 losses. So that you always want to have a good win to loss ratio, but don't steer yourself blind on that ratio, because a lot of people focus too much on the ratio and make bad trades because of that. So this is what we got for gold. We want to see this happen. Come back up here, test this level, and from there move down. And when will it come back to this level? Either from here, from 23.6 Fibonacci retracement, or from this 20-day EMA on the 4-hourly time frame. So somewhere around here, I think it will bounce up and test this level again. If not, we're looking for other setups. But this is what I see happening. Let's see if I'm a wizard, if this plays out as I'm saying it. Yeah, that's that for gold. We leave gold there, and I can do like this. I can post this in the Telegram channel. If you guys ain't in the Telegram channel, then the link is in the description box below. Do like this. All right, let's look at Euro USD. Euro USD, I'm sad to say we missed a really good trade yesterday. So this trade, a really good trade, but we missed a trade yesterday. What do I mean? So in the live stream yesterday, we did the setup, and I said if it comes back down, we have a nice entry into Euro USD. Why is this a nice entry? Because different reasons, but we have a nice retest of this support. Then it confirms that's the last confirmation we need to enter the market for buy. Well, what happened? It came down. It retested just as we wanted, but it was so quick that I missed it. I was in a meeting, so I came in maybe like 10 minutes too late, and during those 10 minutes, market was already like up, was moving. So I missed that. Oh snap! What am I saying? It's not even that. It's this level I'm talking about. I moved this. I confused myself. I'm talking about this level here. This is where we were supposed to enter the market yesterday. We wanted to see a retest of this trend line as support. So basically on the 1.053. But that one is gone, so it's in the past. And what we're looking for now to enter the market is maybe even better. Maybe even better. Look at this. Wait, let's move a little bit. I know it gets confusing with all these lines. So, just to recap on Euro USD, so you guys know what's going on. We got sweet spot zone from this sequence here, this whole sequence that we've been in since basically the beginning of 2021, and that we bounced out of in 2022, started to climb up again. This whole sequence, we got the sweet spot zone here, right? This is the sweet spot zone. The two yellow dotted line, I'm gonna make them thicker so we can distinguish them. All right, cool. That's the sweet spot zone. We came down and we came up into the sweet spot, came back down again, and now we're moving up again, back into it. Now, inside that swing, we have another swing. What swing am I talking about? I'm talking about this swing that starts from here down to here. So this is also a sequence inside the big sequence. So back to the babushka dolls that I was talking about. Big doll, smaller doll inside the big doll, and another smaller doll inside that doll. Same thing here. We got a big swing, a big sequence, and we got a smaller sequence inside this big sequence. Now, when we pull in Fibonacci on this big swing, from this top to this bottom, measuring this sequence, what do we get? We get these lines here. So that's that Fibonacci. And we get another sweet spot down here. You guys see this? This is the sweet spot from the last sequence. And you guys see, market is respecting these levels very much. And right now, where we are testing the 61.8 Fibonacci retracement. So the top of that sweet spot, we're testing it as resistance. So the question is, will this hold? And this is happening at this very moment. Question is, will this hold? You guys see, it bounced off once, came up, bounced off, like all these wicks you see. Let's go on the hourly time frame. Yeah. You guys see this. So it's really testing it. It's really stressing it. And I'm always saying it, like support and resistance is like floor or roof. And when the market comes back to retest it, it's like a sledgehammer going against that roof or against that floor. Every time it retests, it makes it weaker, weaker, weaker. So you don't want to see too many tests of a certain level if you're looking for it to bounce off that level, because for every time it comes back to retest that level, it's going to make it weaker and it's probably going to break, and we're going to see the market shoot through. So what we got? We got this trend here, right? Pushing up the market, but squeezing it against this 61.8 Fibonacci retracement. So basically, what we want to see now is we just want to see this breakout. Boom, boom. That's what we want to see. I think it will happen. Why? Because we have tested it already so many times. So I think this resistance is very weak now. A lot of these sell orders that were here are filled now, and the buyers has taken over. But nothing is sure in the markets. Some news can pop, and we will see the dollar stop pumping directly. If dollar starts pumping, Euro USD will drop, of course. But this is what I see now, and this scenario can play out within an hour, so we can have a very nice trade here within an hour or so. If it doesn't hold, of course, we're looking for a sell. And if it doesn't hold, I think we're looking for a major sell. Like that sell will drop hard, at least down, come down and test this level again. Maybe halt here first at this trend, and then break through and come test this level. But that scenario ain't yet. Now we're looking for the breakthrough. We're looking for the breakout, and we stick to that. All right. So I can post this one in the Telegram channel as well, and write some notes here so everybody's remember what was said. For price to break the So hope you guys understand. Looking for price to break out the 61.8 Fibonacci retracement level. So this level here. Looking for the price to break out. We want to see a 50-minute candle. So we go down to the 50-minute time frame. We want to see one 50-minute candle close above it. And then we want to see the other one come down and test it as support now. So confirming that this is now a support. Testing it as support, and then on the third candle, so one candle breaks through, closes above. Next candle comes down and tests this as support. Third candle shows volume that is actually starting to push up. That's when we're going into the market. That's why we're inputting no, and this is the reason why we're inputting no buy limits or anything like that. It's not often that I use buy limits. A trade of price action and a trade of the active price action that I see right now in the moment. This is why I love to scalp also, but that's that. So this is why we can't put a buy limit on this one, because in between there, let's say this 50-minute candle, we want to see it close above, right? Above this line. But until it has closed there, it might range a little bit and then close above. So if we have a buy limit can trigger, and then our stop loss can trigger, and like we get stopped out, and then market moves in our direction. So that's the classic thing that happens. I think a lot of you has experienced. Like how many of us haven't experienced? Even in the Telegram channel, I think it was last week, where we go into the market, we enter perfectly, We get stopped out, and then with like a couple of pips, and the market shoots exactly in the direction we want to. Classic. So 50-minute time frame, 50-minute candle, close above. Next one contested, but doesn't break below again. It can wick down, but it doesn't close below, close above. Next one starts pumping up, shows volume up. We are in Euro USD trade. That's it. Let me post this one in the Telegram channel as well. I'll just make this lines thicker so you guys see it better. And guys, if any questions, if something y'all don't understand at any point, let me know in the chat. We're in this together. I feel like I'm rambling with myself sometimes, talking to myself, you know, but then I see some comments in the chat and then I know like people are live actually looking at this. Boom. Euro USD. I forgot this again. That's that. Perfect, perfect, perfect. Let's get back to gold. What's happening there? All right, so we're at that moment right now. You guys see it? So what did I say? We're gonna bounce off the 20-day EMA. We at the 20-day EMA right now. Oh, it's possible that we're gonna bounce off the 20-day EMA, but we're gonna test it at least. We're gonna test it at least, and we are testing it right now. So let's see just how the market reacts to it. If we're gonna bounce off from this one or from the 38.2 Fibonacci retracement. So gold right now is no trade. We're just looking to see what happens. What do you think of buy on gold soon? No, I don't think any. I don't think of buy on gold because why? Like, look. Okay, so let me explain this. I got a question in the chat if about what I think on of buy on gold, and looking at this. So I should be pro. I should want to buy gold, right? Because I think that market's going to come up and retest this place. So we could buy from here to here, right? The problem is we don't know if it's going to bounce off this level or maybe even this level. That's the problem. And gold, from my experience, let's move down to a lower time frame. So let's say we think it's going to bounce off this. Can bounce off a couple of pips and then it moves down again. It's probably going to do that also. So we're going to trigger our stop losses, and the thing is, and I'm always saying it, let the market come to you. So we got a nice setup here that we know, like this resistance, this support here that I'm talking about, this 20-day EMA, this is not strong. Remember that. So the 20-day EMA is just, it's a resistance or support level, but it's not strong. The higher the time frame, the stronger it is, but still though, it's not very strong. This one, it's stronger, the 38.2 Fibonacci retracement, but it's also not very strong. This one here, this zone, this orange zone, is very strong. Why is it very strong? It's very strong because it's a key level. It's the top of the sweet spot zone from a bigger swing. The market has respected a lot and showed a lot of respect in form of resistance and support. So if market comes back up here, we know that like even if the market wants to break through this level, let's say market comes up here and it wants to break through this level. Before that happens, market comes up, we're gonna see, oh, it's not. we're gonna see something like we're gonna see the market drop at least like 10 pips, 15 pips. We're gonna see the market drop. So we have some bags to pick up there before the market does this move. That's why we always have those different take profit levels, because we want to cash out and take some risk off the table as soon as possible before market reverses on us. So this is why we use this zone. Very strong resistance, a very good entry point for a sell, for possible sell. This zone not strong, that's why we're not entering a buy. We could enter a buy, of course, but that is taking risks. And yeah, me alone, I can do it. But the thing is, guys, I'm sharing my trading ideas, so I kind of feel responsible for y'all guys as well. So I want to see y'all guys make good results. That keeps me accountable, forces me to make good results as well. And therefore, I'm only taking trades that I feel comfortable with. According to others, they want to buy gold at 86, but I cannot see why. At 86. Let's look at it. 86. That's here. Yeah, that's basically, yeah, that's where we're at now. So they're probably looking at the 20-day EMA. That's probably why. Because, but the thing is, there's no confluence there for support. So that support like doesn't have to hold. Or at least I don't see any confluence. Maybe I'm missing something. Yeah, of course we have a smaller swing inside the swing. We can look at that. Yeah, because it's in the sweet spot from the smaller swing. But but the thing is like this: when you have swings on the hourly and the 50-minute time frame, and you're measuring Fibonacci there, those levels are not as strong as the levels that you measure from the 4-hourly and the daily time frame. So yeah, that's why you don't see me very often pulling Fibonacci on the hourly and on the 50-minute time frame. If I do it, it's because I'm looking for entry. So this could very possibly be a reverse zone for the market to come back up and test this zone that I was talking about before, but it's not a strong confirmation. Therefore, it's not for us, so to say. Let's say the candle closes at 23.6 fib level. Do you count the wick as the rejection from 20-day EMA, or count the close of the body from the fib level as the rejection? I count the close of the body always. So this is a very good question, Staffy. Very good question. So the question was, if like here, for example, this candle came down, tested the 20-day EMA, and it's moving back up again. All right. When we go on the lower time frame, we see that it's moving back up again. So we got a green candle here. Market is moving up. All right. But what is the test? Is it the close of the candle, or is it the wick of the candle? It's the close of the candle. That's the real test. Market can very often come down, wick against it, and bounce off like that. But if we want to use it as confirmation, then we want to see a close. Because market can very easy push through and then come right back up and respect it with a close. And this push through, this wick out, is often a stop hunt as well. And we don't want to get stop hunted, right? So that's why we're always looking for the close of the candle, like the real confirmation. And I don't want to say the sad thing, but the hard thing with trading is that sometimes you look for these confirmations, and like, guys, I've been trading sometimes a week and I don't get full confirmations. I don't see any trade that I'm fully comfortable with. And the next week, boom, win. Sometimes it is like that. Market be against you and you don't see any real trades. The important thing is not to start chasing the markets, not to start becoming emotional, start chasing the markets, but to remain calm and wait for that trade to come to you. It will come. Sooner or later. This always trades in the market. So gold, we're leaving it like that. Euro USD still testing another candle now. Still testing it. Oh, sorry, man, I ran ahead of myself. I was on the 4-hourly time frame. Yeah, but still low. Looking to bounce off the 20-day EMA on the hourly time frame, which means another hit against this roof, against this resistance. I think that if this now bounces off 20-day EMA or from this trend line to touch this, to touch the zone that the level that we were talking about, the 61.8 Fibonacci retracement. This time, I think it's gonna break through. Like it broke through here. You guys see it? It broke through, came back down. So this time, I don't think it's gonna hold. You guys see this? On the 50-minute time frame, this is what I'm talking about. So this one gave us one confirmation, broke through, but the next candle, it didn't come down and test it. Started to shoot up, was faking up people. So people, like, trust me, people got greedy here. They were like, oh shit, market is gonna move up. Let's jump in. Everybody jumped in, got wicked out. Market moved down, triggered all the stop losses on the way, and it's underneath again. This is so typical. So therefore, this is the reason for why we want to see this in the next 50-minute time candle close above the 61.8 Fibonacci retracement. We want to see it close above, and then we want to see the next one start giving volume. Sorry, I take it back. Easy to understand. Not close above, because this one close above. We want to see it close and test the previous resistance as support. So we want to see the next 50-minute candle test the previous resistance as support. When it comes and tests this, and then the third candle shows volume up, that's when we want to enter the market. All right? So this can be anytime soon, within an hour or so. Going back to Bitcoin to see what's going on. All right, so it's really stressing this trend line right now. It's stressing it. We got the 20-day confluent with that on the 50-minute time frame. Market, same thing, like the Euro USD. Market wants to break above, but hasn't really done it yet. So we will see basically in the next 1 or 2 candles what happens if it breaks above. We have the same situation here, exactly the same as Euro USD. Exactly the same. So I can even look. I can even take this text here that I wrote, copy it, go to gold, text, por favor, paste it, and let's see if we can zoom in a little bit so it gets easier to see. Same thing here. All right, guys, that's think that's it. I'm gonna share some thoughts, some information that I have received about the global financial situation and crypto and everything. So this is basically, what can I say? Not a theory, but stronger than that, but a scenario that can play out in the coming weeks and months. So we see crypto is pumping now. We see Bitcoin has done a little pump. It's all looking good and sweet. We love this. But is this the end of the bull rally? Sorry, of the bear market. Will we now enter the bull market, or have you already entered the bull market? One second, I'll just post this chart like that quick. All right, cool. Have we entered the bull market? My guess and my analysis of it is no. Why is that? By the way, Prosperous newsletter is in your mail. If you are a registered user of the Telegram channel, then you have it in your mail now. I'm talking about that in the mail. So I don't think we are in the bull market yet. I think we have another drop to face in the crypto markets, and I'll explain why. I talked about the banking system. The banking system is the biggest Ponzi scheme the world has ever faced. And when it falls, because it will fall, because it's all based on trust, same as the fiat currency. Fiat actually means trust in Latin, so it's all based on trust. And as soon as the trust for the banking system and for the fiat currency leaves, as soon as the trust is not there anymore, the whole thing collapses. This is how it's built. I'm gonna do a video on that, and you can watch it. But I definitely recommend you guys to study it because it's important to understand what money is and how money is made. You want to trade the markets, you want to trade money, we're trading currency. This is money. So then you got to understand what money is, how is it made. So the banking system is a big ass Ponzi scheme, and it will fall. It's already crumbling. People are becoming more fearful and for the banking system and for the fiat currency, and therefore leaving it and jumping into crypto. That should be something very good for crypto and get crypto to pump. It did, obviously, it pumped. But this is the thing. When the banking system really collapses, like people don't understand what kind, or like what, how massive the side effects of that is. Like when the banking system collapses, the whole system collapses. The whole world as we know it collapses, and the new world order will break out. There will be a financial reset of the world. The whole global economy will crash hard. So when it crashes, when the stock market crashes, the indexes, the pension funds, the hedge funds, all of those goes down. What happens is some big players will of course remain. Like I think like JP Morgan, BlackRock, of course, like these massive institutions, they will remain. They're probably pulling strings in this, and maybe they're even behind this whole scenario that we're seeing right now. It wouldn't surprise me. When this all crashes, crypto crashes as well. Crypto will also go down with it, because crypto is very affected by what's going on in the financial markets. But here's the thing. When the crash, like when the storm is over, the dust has settled, and we're looking at the damages, and people are trying to recover now, everybody will start looking at crypto. This is when everybody will start running into crypto, because they've realized, shit, the system is fucked up, it's broken, and we need to find a substitute. So they're going into crypto, and when they're going into crypto, that's when you see the bull market start. That's when we go out of the dip, and you see crypto starts to accumulate and build up real value, real retaining price levels, and start climbing up and start doing what it's so famous for doing, which is basically this. This is how bull market looks like. So this is the COVID dip. We started to move up, and then we get those parabolic rises. This is my theory. This will play out when? This year. I don't know if next week. I don't know if next month. In a couple of months, but in this year, 2023. It will play out. That's that, my people. I hope you're having a blessed day, blessed morning. Trade safe, as I always say. Remember proper risk management. And with that said, let's stay prosperous and be blessed. Salute from Spain.